Hello, in this video, I'm going to share with you some trading strategies or how to approach the market, okay? When it comes to technical analysis, okay, that's what we are going to focus. That's going to be our main focus. You know, we have fundamental analysis, sentimental analysis, and technical analysis. And most of the time, technical analysis has got to do with pattern recognition, okay? And you can recognize these patterns or the data, that you're going to use to recognize these patterns are on the MT5, on the MT4 and all. We are going to be using MT5, and the reason why I prefer using MT5 is I like the fact that you can easily have a fair idea of how much you lose in case the trade doesn't go your way, and how much you make if the trade goes your way. So by just dragging lines and all, so we are going to be doing that shortly. The MT5, as you can see here, this is the chart where I have the mouse. It's what we call the chart. Okay, it looks scattered. We're going to tidy it up. Here where we have the prices, the instrument is what we call market watch. Okay, down here we have balance, how much I have in my account. The equity is just the balance plus or minus a floating profit or floating loss. So as you can see, I have a floating profit of $34 with a lot size of 0.01. When I entered this trade was 6th of June. Okay, it was a buy and all of that. We have margin is like how much the broker is setting aside in order for you to trade. Free margin is how much is left for you to trade with. Margin level, as you can see here, measures the strength of your account, okay, or the health of your account. So if your margin level is dropping, this is 2,000 something, 2 million is a lot, but if your margin level is dropping, what that simply means is that it's like your phone battery. When your phone battery is dropping, what that tells you that your phone might go off soon. Your margin level is dropping, the percentage is dropping, tells you that you are losing too much. You need to pay good attention to that. At the top here we have the time frames. Okay, so D1 means daily. It means that every candlestick you see there or the bar you see there refers to what's happening in a day. 4 hour time frame, 1 hour time frame, monthly time frame, which traders choose based on their what they want to do. Okay, so yes, there's a summary of that. We will delve more into that. If let's say you want to log into your account on the MT5 on your PC, after you have created an account with Ingot, you click on file, you come to login to trade, and then you put in the details there. Okay, let's say you don't have this, or you have this instrument, you want to add more, just click here, then you type in whatever you want to add, and then that will appear. You can join my educational sessions and learn more about these, and as we keep going. Now let's delve more into it. Now when you have your charts scattered like this, it would be ideal to tidy it up, okay, before you now begin to set it up. Like you want to operate something, you want to approach the market in a certain way, so you need to set your chart up to meet however you want to see the market. Okay, so here, this is the chart. We want to tidy it up. Okay, it looks too scattered, so you right click on the chart like this, you scroll down, you come to properties. Or first of all, let's delete this ADX. Click on that like this. You need to see indicators. So you come down, you see delete indicators window like this. So it's gone. Now we have all of this. Let's get rid of them. You scroll down, you see grade. Click on grade. That is also gone. This is a period separator. You click on that. You come to properties. You come to show. Okay, so you see show period separators. You click on that, then click on OK. So that is also gone. Okay, then these lines, the yellow line, we delete it because that's an indicator as well. Click there, delete indicator. I'll explain all of that. Okay, now we have a tidied up chart, but in trading most of the time, what the colors that are normally used is the red and the green color. Okay, so the red color represents the bears or the sellers. So in trading, when you hear bears, sellers or shorts, okay, you see a short, bear, sell is the same it's the same thing. If you hear boo, long, buy, it's the same thing. Okay, but boos or the buyers are most of the time represented with a green color. Bears are most of the time represented with a red color. Now, bears or the sellers sell when they believe the price will go down. Buyers buy when they believe the price will go up. So that's what we are going to, play with. So I right click on this. I come to properties because I want to change the colors of the candlesticks. Okay, I come to colors. Bear, red, like I said. Then boo, green. And click on OK. You can see the colors have changed. Okay. Now I realize that the thing is too. Has occupied the whole space. Charts. You just click on the numbers here. Okay. Drag it down like this. Okay. So that it normalizes nicely. Okay. So now we have our red candlestick. Green represents buyers because it tells you that price is going to go up. Red tells you price came down. Okay. Within this hour. Now we want to set it up. Now remember, when you are trading technical analysis, you can trade from price action point of view or indicators point of view. Now price action is like looking at the chart like this, raw like this. Okay, and then you are now going to identify your key levels, blah blah blah, and then you do the trade, which I'm going to explain more of that. And then we have indicators. Indicators are built in the MT5, which gives you a fair idea of the direction of the market. Okay, so we are going to look at how to approach the market from price action point of view and from indicators point of view. We start with indicators because that's very simple and straightforward. But now that we have this, okay, we are going to save this first, and then we will be now doing the things that we want to do. So now we have our greens naked charts. You right click on it, come here, templates. This is save. So the save, how do we put it? We say tutorial. Okay, and go to save. All right. Now I want to trade. I would like us to use maybe 4 hour, okay, for the illustration. So you come up here, you see H4, that's 4 hour, or you can click on the chart like this, come to time frames, you select 4 hour. Okay. All right. This is how the market looks 4 hourly. Okay. What that means, each candlestick, this candlestick represents what's happening in 4 hours. Okay. All right. You can join my free education session and learn more about these things. Okay. All right. So let's start with indicators. I'm going to share with you 4 strategies or 4 indicators that you can use to trade the market. Okay. And then explore with them. The first one I'm going to have a look at is called parabolic SAR. Okay. So where do you find the indicators? You move the mouse to the top left, you see insert. You click on insert, come to indicators, then you come here, you scroll down to trend. Okay. Then you come here, you select parabolic SAR. Click on it. Realize that after clicking on it, you see some green dots on your screen. Okay. It's very simple. With parabolic SAR, when you see the dots above the candlestick, so these are the candlesticks, okay, or the price. When you see the dots above the candlesticks, it tells you that there are high chances price is going to keep going down. Imagine the parabolic SAR to be a weight, okay? Pressing something down. It tells you the high chances price will keep going down. I hope you get it. All right. When you see the parabolic SAR down, okay, down below the candlesticks, it tells you that the high chances is going to keep pushing the price up or the candlesticks up. Remember, buyers buy when they believe price will go up. So then if you see the parabolic SAR down, you can just press your buy trade and then move with it. If you see the parabolic SAR up, you can press your sell trade, believing that the price will go down. Let's note that. Okay, so parabolic SAR is simple. We clicked on that. So let me go back again. Templates tutorial is raw like this. we want to add an indicator called parabolic SAR. You come here, insert indicators, trend, parabolic SAR, like this. Now I said if you see the candlestick below the parabolic SAR, which are the dots, tells you the price is going to go down more. There are high chances price will keep going down. If you see the parabolic SAR down, it tells you that the chances price will keep going up. If price is going to go up, you buy. If price is going to go down, you sell. So looking at this, we believe price will go down. So what are we going to do to sell? To sell, you right click on the chart like this. Then you come to one click trading like this. Okay. Then you come here, you press sell. Realize that immediately we pressed sell, this trade popped up. That is BTC USD. Up here you can see BTC USD. Okay, and then that is it. Now this is where we have the price here. Okay, sorry. Initially, remember, we sell, or sellers sell when they believe price will go down. Buyers buy when they believe price will go up. But we believe it will go down because we saw the parabolic SAR up here. That's why we press the sell. If the trade should go our way, what you have to do is, let me maximize it. You see the blue line where we enter the trade. Okay, you tap on it like this and you drag it down. You see the red line dragging down. Now look at the extreme left. TP means take profits. Okay, so if the price keeps moving down to this point, we are going to be making a profit of, let's say this point is $57. Okay, so maybe that's what we want. Remember, the lot size here, 0.01, is what we call the lot size. If your lot size is big and you're making profit, you make more profit. If your lot size is small and you're making profit, you make small profit. So that's part of risk management. That is our stop loss. Now that's our take profit, because sell, we believe it will go down. Buy, we click here, we drag the place where we bought it. Okay, the green dotted line. You can pick this, you drag it up to this point. Okay, now this point, if we are losing, we lose negative 28. Okay, and then we are cool with it. So we just click on that and then we have it there. So if the trade doesn't go away and it goes to this point, it will hit on that and then we will lose our trade. But the reason why we took a sell is because we saw the dots here, and currently we are in profit. So we are profits BTC, and then it keeps changing from there. So we can wait for the trades to do whatever it wants to do, and then we'll make a decision from there. Okay, now let's look at, that is it for it, because we are going to use the same thing for another scenario. So we can close our trade. Okay, now we are done with parabolic SAR. Okay, so what do? You click on it like this, then you delete indicator. Now another indicator that we are going to use is what we call moving average. So that one, you come up here, come to insert indicators, you select trend, then you select moving average. Okay. Realize that immediately we clicked on there, we saw a white line. Now this is how the moving average also works. When you have the candlestick below the moving average, it tells you that there are high chances price will keep going down. Okay, when you have the candlestick, bars below the moving average, it tells you there are high chances price will keep going down. So as we can see now, we can see that the current candlestick is below this moving average. So what do? We believe it will go down. Sellers sell when they believe the price will keep going down. Okay, so we will press our sell trade once again. There's our lot size. You can choose to increase it or decrease it depending on your risk appetite. So we click on that and then we have sold again. Okay, now selling that again, because the candlestick is below the moving average. Okay, if we want to set our take profit, stop loss, and all of those, okay, if the candlestick is below the moving average, it tells the price is going to go down. If it crosses the moving average, it tells the price is going to go up. Okay, so then you can click here, you drag here as your stop loss. if we are losing on this trade, we are going to lose negative 11. Okay, so we can leave it there. And then if we are winning, because sell, we want it to go down. Okay, so if the price keeps going down, you just click on the same price you bought it, you drag it down here. That's like $50. Okay, and how do you know make a profit of $50? When you are dragging it, you see negative here, negative, positive 36. TP means take profit. Okay, and you leave it here. You can leave your trades to run. So these are simple strategies that you can use, or indicators that you can use to get some trades done on your own. Okay, now we are done with that. We close our trade. Remember, we are just closing it because of the illustration purposes, but I've showed you how to use parabolic SAR, how to use moving average. I'm also going to share with you how to use another, so you delete it, or if you don't want to even delete, you click here, you come to template, you select tutorial like this. Okay, now another strategy I would like to share with you is indicator is MACD. Okay, so you come up here, insert indicators, you come down here, oscillators, you scroll down, MACD, oscillators, you scroll down, you see MACD, click there, you select OK. Okay, now what MACD suggests is that whenever you see these bars, okay, see the bars are up here. When you see these bars up, it tells you the high chances price is going to go up or is already up. Okay, when you see the bars down here, it tells you price are down or is going to go down more. Okay, so for instance, somebody using a MACD can see this as a buy. Okay, and he or she can choose to buy because these bars are above, or they look above, and this one look below. So the person will do what? Will buy. Come here, on trading, buy. Okay, now the buy, click here, you drag it up as your take profit, because buyers buy when they believe it will go up, sellers sell when they believe it will go down. So we want to take our profit here, and a stop loss is the same price. Just focus on the line, the green line. Okay, and then drag it down. Hold it, drag it down. We want to lose negative $15. That is fine. Okay, then we are good to go. So we have looked at three main strategies using indicators: parabolic SAR, moving average, and MACD. There's another one called relative strength index. You can join me in my educational sessions and learn about that, or you can Google it and learn more about relative strength index. Okay, now I told you analyzing the market two ways. Okay, especially technical analysis. You can do price action, or can you do indicators? I've shared with you indicators. We are now going to look at price action. Okay, with price action, there are two ways to go about it. Okay, first of all, is either the market is trending or it is ranging. Okay, I'll share one with you. You can join me in my educational sessions, and then we learn more about the other one. So this I'm going to share with you with the ranging markets. Okay, now ranging market is a type of market that price keep bouncing between the highest price and then the lowest price. Okay, let me delete this. Okay, now if I look at this carefully, okay, if we all look at this carefully, we would realize that, or you can see that this is the highest price. Okay, let me pick this. Highest price, lowest price, lowest price. Okay, so now let's have a good look at how to approach the market using price action. That one is raw. You just have to have a look at it, and like I said, you can join me educational sessions, free educational sessions, and learn more about price actions. Okay, but until then, you can use the indicators freely and then keep going from there. Okay, now there's the highest price, lowest price. Okay, so I come here, I pick this horizontal line, click on it, just drop it on the screen like this. Bam. Okay, and then come back here, click on it, and drop it on the screen like this. Bam. Okay, all right. Now if you look at this closely, one thing about ranging markets is that price keep bouncing between highest price and lowest price. So it forms a V or inverted V shape. Okay. So if you look at this, price started moving from here, went up to this point. Okay. And then that was lower price to highest price, came back down here, and now it is moving up. Okay, so if you are trading within the range, you are believing that price would, even is here, you are believing that it will go up to hit this point. Okay, now the highest price is what we call resistance, and the lowest price is what we call support. Okay, now resistance, and support basically happens in a ranging market. Now, how do you trade it? Two ways. Pay attention. You can choose to trade within the range. Okay, it goes up and down, up and down. That's where you want to be trading. Or you can trade outside the range when the price breaks the up and downs. Okay. Now, if you are trading within the range, price goes up, it comes down, up, it comes down. So when it goes up, it's believed that it will come down again. If you want to trade within the range and you want to buy, you buy when price hits the support. Okay, gets rejected by the support. So you buy low here, price went from up, it came down here, it got rejected by the support, and then it went up. Okay, if you want to sell within the range, okay, what you do is you sell when the price gets rejected by the resistance. Okay, so it hits the resistance, then price starts coming down like this. Okay, so that is how trading within the range goes like. Now, if you want to trade outside the range, you buy when price breaks the resistance. So there's the resistance. When the price gets here and then it breaks through the resistance, you buy. If you are trading with outside the range and you want to sell, you wait for the price to break like this, break the support to the downside, then you place your sell trade. Okay, there are two ways: trending market, ranging market. We have looked at ranging market, how to approach it. Okay, support below, resistance above. Want to trade within the range, buy when support rejects the price, sell when resistance rejects the price. Okay, want to trade outside the range, buy when resistance is broken, sell when support is broken. Okay, now you can learn more about this, the other strategies, by joining my educational session. Learn them for free, and then let's pick it up from there. Okay, if you are still learning, I encourage you to learn it and believe that you're going to thank yourself very soon. Thank you. Reach out anytime. Bye bye.